Hello there, everybody. It's Michael Silva. Man, this market just ages you so quick with this amount of volatility, I tell you. We are going to be focusing in on the SP 500 and getting ready for tomorrow's CPI data. The White House did state that tomorrow's inflation data is to show a higher year-on-year figure. Consensus is 7.3%, and consensus has been right the previous report. So we'll see if it comes in above and or below and or on target. Now, I can't tell you how the market's going to respond either way. People that are so confident in saying like the market's going to do this or the market's going to do that, it's very hard to determine what an entire marketplace is going to do on this data. So typically what we do see and what I've noticed is you get knee-jerk reactions in a certain way, and then you see the market violently turn against that initial knee-jerk reaction. So what you want to do is you want to see how the market digests the information, let it calm down, volatility expands out of the gates on the report, and then it comes back down. Now, in this video, I'm going to show you some key levels, and these key levels are based off what the options market is actually pricing in going into these next 2 days. If you're new here, welcome to the channel. My name is Michael Silva. You're watching the Stock Market Brief Show. I use technical analysis and market analysis to get a good idea as to where the market might be headed next. If you watched yesterday's video, thank you very much. You guys gave me 1,800 likes on that video, which is far more than the typical amount. And y'all showed up too as well. I see all there. I was interested to see, who's been here, who's new here. So I got a couple new subscribers, and then also some people that had been here since 2020. I see you. Rob, you're always here. I see you showing up and always leaving a comment. I greatly appreciate that. We even had a long-term viewer, first-time commenter show up. I really appreciate that. That was actually a prior video there. So just thanks for all the support in there. What did Amir say? What is this? Amir? Hey, your hand drawings are getting better. Ah, yes, thank you. They are. I can draw the thumbs up a lot better. Sorta. And also to note, the 583 active patrons that support my channel too as well. Thank you all so much. The support means a lot. We got a lot to talk about in today's episode. Let's get into it. All right, everybody, welcome back. So we're looking at the 11 sectors that make up the SP 500, and we got the indices there on the left-hand side of the screen. One thing to note, everything's in the green, party on. Yeah, it's fine, nothing's wrong ever. That's what most people are going to probably think. Everything's good. Well, in today's video, I'm going to be showing you a couple things to just keep an eye on, some levels to watch. Now, I want to just kind of give you an idea of what I expect to potentially take place tomorrow, given that volatility is still being priced into these markets. But to give you a better idea, I want to give you a little bit of context. So in order to give you context, I want to look at a weekly time frame and zoom out a little bit. And I just wanted to call out here the left-hand side of the chart. We're running into that upper trend line. We did so on a negative divergence. We talked about it when it was happening. Momentum here is slowing down and still pointing down too as well. So not looking all that great as far as a momentum perspective. And you can see we are, had that sell off, and now we're seeing a nice rally up. Would you be shocked to see something like this take place for quite some time? Don't be too shocked if that actually happens. I know people are trying to call this the top right here, but don't be too shocked if we also get a move up higher. It's more than possible, and volatility is still here. And volatility, right, once again, it can go plus or minus. But as it stands right now, we had a violent move to the downside, and now we're having an aggressive move right back up to the upside. So until we get some tighter price action, especially on these weekly timeframes, we'll get a better idea as to what, as far as certain trades set up, and we can back into our risk a little bit, meaning that we can take higher, not necessarily higher probable trades, but trades that give us a higher reward than the risk that we put on, right? In times of high volatility, typically higher volatility is good for intraday traders, but when it comes to swing traders and investors, you get sloshed around a lot. A couple other times since we hit this trend line, we've just been kind of going sideways. So hopefully it gives you some bigger context, right? So to the upside, we still have wind at our face. I guess that's how I would interpret that. If we just zoom in on the weekly time frame, we're coming into an area of prior resistance, right? We have a 50-day period, that's the 10-week moving average, which is just about the 50-day moving average. We had the prior resistance from the prior week, and we had this opening candle here too with this gap just above us. And keep in mind, like I said, it's been a violent move down, violent move right back up, okay? So is this just gonna go like this? Maybe, but even if it goes like that, I wouldn't be shocked to see it come right back down. to this range, as we have been trading relatively in a sideways range. Okay, now let's take a look at what the options market is pricing in. So first and foremost, last week they priced in a move from around 460 to around 437. Okay, so a big range of volatility here. Now we have 2 more trading days left going into the CPI data. What is the market kind of telling us? The market is saying that they're expecting a plus or minus $6 move. Okay, and this doesn't mean that it's going to be 100% accurate by any means, but it has been a good gauge to give us an idea of what to expect these coming days, right? So we're not, thrown to the side by some weird headline. What I'm thinking is, if we do get a continued move from this gap up, right? That was a strong day. If we get a gap up and a continued move to the upside, you want to look at 460 to around 463 as an area of resistance. I know that that's a big range, but just keep in mind, if we get a very strong move to the upside right out of the gates on the report, it could very well be a knee-jerk reaction, and that could be a potential area to take profits and or fade the move. Why potentially fade the move? Well, that would be getting outside of what the options market priced in the prior week. And according to the Theo team's data, 70% of the time, the options will expire within that weekly range. And we are currently right there within it. Now, if the market gaps down and sells off, understand that there is a lot of downside risk here to the bottom end of this range. However, the options market is saying that it's highly possible that we fill this gap, right, just that we gapped up today. So perhaps we get an intraday bounce. Maybe we see more sell side. That's a possibility, and you can create trades around it. But if we get a strong move right out of the gates to the upside, that could be a little bit of a warning sign or knee-jerk reaction. And that is one thing that I will be paying close attention to. Let's take a look at the 15-minute time frame. The 15-minute time frame, we had that nice big gap up, and then we kind of just drifted higher overall. One thing that I want to point out that I just didn't say on the daily time frame is understand this is a very big move to the upside and continued strength, but the volume wasn't like, it wasn't just phenomenal by any means. Especially if you look at the SPX and contracts traded in the SPX. So the volume was okay. To support a move like this, I just don't see it as being super bullish, but that's okay because more volume could come in later when the CPI data comes out. So I think we're kind of just paused a little bit right there. Now, from a bullish perspective, which I'll go back into the 15-minute time frame, keep in mind this is still that possible cup with handle, and we break out and we just scream to all-time highs. Okay, from a bearish perspective, you can look at this as a potential bear flag, and we can come up, right? That could be an area of resistance. It can hit with this trend line right here. That can make complete sense. And then we might come back into that lower portion of this channel, maybe potentially break down. Okay, let's look at the 15-minute time frame. Overall, very boring type trading day, right? If you didn't catch the move, then you're either caught chasing and hoping that it gaps up or rips up tomorrow while we're already just about at that upper risk range. Keep in mind, like I said, what the options market is pricing in come tomorrow is about 463 to the upside of the risk range, and that would put us just right at about filling this upper gap right above us. You can see the market has been kind of drifting higher, but the momentum has been slowing here and here on those two technical indicators. On a bullish perspective, we are above that 5-day moving average, and it has been inclining. You can see that volatility contraction pattern that we talked about in yesterday's brief did play out to the upside. So if you were able to catch that early on, congratulations. Nice little move today. Now let's look at volatility really quick. I found this to be kind of interesting. Now, volatility sunk off pretty severely today for the most part, getting back just under that 20 level, which it hasn't spent too much time below 20 for quite some time. Now, from a bullish perspective, we have this gap below us, but we now have an open gap above us here, and then also way the heck up there at 45, which I've discussed in prior videos. We have a positive divergence forming on the VIX, and I know a lot of people don't like using technical analysis. They make fun of technical analysis when you do that on the VIX, but I personally like to look at support, resistance, and potential trend lines, positive divergence, etc., and wedge patterns on occasion too as well, because they've typically worked out pretty well for the most part, including this move all the way up to here, which we talked about from a prior video looking at a potential inverse head and shoulders. So the reason why I'm pointing out this wedge here is because, well, we acted as resistance there, support, support, and now we're coming down to this lower range, which is right around this gap. So if we do get some crazy volatility tomorrow, this thing could potentially set itself up for a big move to the upside, which could cause a lot of shakeup in the markets. Now, what I find interesting here is if you look at the VIX, these last couple of days, it's been selling off, right? It's been heading lower. However, if you look at the VVIX, right, this is the volatility of that index, it actually hasn't really gone anywhere, and this has been coiling up quite tightly too, with a subtle positive divergence there too as well. So if the VIX does fire off, and this has been giving us a little bit of an indication, saying that it's holding up, so volatility is still relatively high, perhaps that can shoot up to the upside. We will see come tomorrow with that data. Understand there's going to be a lot of knee-jerk reactions, so it's not really about predicting right here. It's just more about being prepared. Now, what's going to hit all the headlines come tomorrow and what's going to be important to watch? The 10-year yield, the TNX. It's very, very likely that, we can potentially come hit that 2.0, which we're not too far away from it, right? That would give us the 10-year yield at 2%. That would potentially cause the tech sector, right? A move like that tomorrow could cause the tech sector to really get some wobbly legs, and that could cause a potential big sell-off, or at least, a volatile day, and where we see aggressive moves to the downside, potentially, all around in the tech sector, especially if this fires off. Now, we are getting, consolidating here, sideways, not doing much. That could be in anticipation of the data that's going to be dropped, and we have a little bit of a negative divergence there too as well. So we will see if this fires off. The bonds, TLT, could very well break down to its lower risk range, which I forgot I don't have that proper chart up right now, but I think it was right down to around this 137, 136 level right in there. Now, this has also been, kind of wedging quite tightly here too. So we will see what comes, but those are going to be important ones to watch. Now, you might be thinking, well, if the 10-year yield rips like that, wouldn't that be good for financials? And it's a possibility that it could be good for financials. The only concern that I have is looking at the spread. The spread has been actually flattening out further, and I'm pretty positive we're going to see a big movement in the spreads as well as the yield come tomorrow, that data that launches. And you can see the 30 and 5, it's heading south, right, more towards inversion. The 10 and 2 has hit another low that it hasn't seen for a very long time, which means it's going closer to an inversion. And when they invert, it's a very good indicator of a recession to come. So it doesn't mean that it happens right away, and it doesn't mean the market's going to crash. It's just an indicator. We've seen what recessions are like in our past. We can study recessions, etc. It's just to give us a heads up notice, and we could talk more about it if it actually does take place, right? In the markets, it's, a lot of people, it's either you have to be a bull, you have to be a bear, you have to be very confident and know exactly what's going to happen. Like, throw that all aside here in the markets. I'm going on a little bit of a rant here, but the markets, if you want to be, in it for the long run, you need to focus on the hardest thing to focus on, and that's risk. You got to get very good at managing risk, and you need to make sure that your growth curve when you're in the markets is slow and steady, right? And then that slow and steady growth compounds over time. And the thing is, if you're really aggressive and you're wrong on one side, it's very alluring to potentially up the amount in a certain trade, and then you kind of just throw yourself all over the place. You need to think like, hey, what are professionals doing? What are PMs doing? Which is, portfolio managers, hedge funds, institutions, etc. They're focused on risk. They're focused on, that's why they call them hedge funds, right? They're hedging out equity risk or hedging out market risks. All right, I went on a little bit of a tangent there. Let's look at financials, right? So would that be good for financials? Well, financial keeps ripping to the upside, right? After a very sharp sell-off, a big V bottom, definitely helping out the SP 500s there too as well. Did put in a little bit of a shooting star candle, and I was kind of prepared for this gap to be filled and potentially here, looking at what the options market is pricing in. Sorry, not what the option market is pricing in, but I looked at earlier today the March contracts. I was looking at, I forget the date exactly in March, but holy moly, there was a lot of put volume on the XLF betting into mid-March. So maybe they're trying to exploit a potential short-term move to the downside. It's very hard to determine. I think we'll have a little bit more of an idea come tomorrow, but I can understand why there'd be, you know, more puts coming up because there's such an aggressive move into a gap fill and this prior area of resistance. So we'll see here how they respond now, right? If yields go up, but if the curve flattens out more, I don't think that that's necessarily going to be that great on a, you know, a curve that is flattening out at a rapid rate of change for the financials. Now, however, if we do look at some financial stocks like BX broke out today, and that looks very bullish, right? That was up 4.58%. It broke out of this bull flag move with a lot of volume. So you are seeing some financial stocks that do have a lot of strength. And then you're also seeing the other side of financial stocks like AXP that have just been on a monster tear that are eventually going to have to take some sort of a breather. Okay, so that's all I got for you on today's episode, everybody. I hope that helps out. Just to kind of recap, the most important thing, what I'll be watching tomorrow, I'll be looking at volatility, right? But I'm going to be keeping an eye on the bonds as well as my levels here on the S&P 500. Sorry I didn't bring up the Qs or the IWM on today's episode, but I figured that this was quite important to look at, kind of a, you know, an overall good look at the market, not just tech stocks here. Keep in mind, if the 10-year yield does start shooting above that 2.0 tomorrow, that could send the tech stocks and also the SPY, right? They're big mega cap stocks in the SPY and the Nasdaq 100. It could you know, potentially be a little bat to the kneecap right there and make their legs a little bit wobbly. That's all I got for you, everybody. Have a wonderful night. Stay safe.